While Bitcoin dominance headlines flood your feed, there's a Solana meme coin quietly setting up what could be the most explosive price action we've seen in months. BONK just broke out of a textbook falling wedge pattern. Derivatives traders are piling in with $30 million in fresh capital and, plot twist, the team's about to burn 1 trillion tokens. Yeah, you heard that right. Trillion with a T. Welcome back to the channel, Crypto Family. If you're new here, smash that subscribe button because we dive deep into altcoin opportunities that mainstream media completely ignores. Today we're dissecting BONK, Solana's deflationary dog coin that just woke up from its bear market slumber. And before you roll your eyes at another meme coin analysis, hear me out. This isn't your typical pump and dump setup. As I'm recording this on Monday, BONK is trading around $0.000021. That's a 3% pump extending Sunday's 5.58% recovery. But numbers don't lie, and the technical picture is painting something much bigger. See this falling wedge pattern that's been compressing price action for months? BONK just broke out. Not some fake out, not some low-volume squeeze. A legitimate breakout backed by serious derivative positioning. But the real catalyst? The community is approaching 1 million on-chain holders. And when they hit that milestone, the BONK team burns 1 trillion tokens. That's 1.23% of the entire circulating supply vanishing overnight. Simple economics 101, less supply plus steady demand equals, well, you do the math. Now before we get carried away with moonboy fantasies, we need to examine what's actually driving this momentum. Because in crypto, euphoria without fundamentals is just gambling with extra steps. First, the derivatives market is absolutely lighting up. Open interest spiked 9.53% in just 24 hours, hitting $30.71 million. That's institutional level capital flowing into BONK futures and options. But here's where it gets interesting, and yeah, slightly concerning. The open interest-weighted funding rate dropped from 0.0111% to 0.0105%. Still positive, so bulls are paying bears to maintain their positions, but that slight decline suggests some profit-taking from early leveraged longs. Smart money might be taking chips off the table while retail FOMO builds. Classic crypto dynamics at play, right? The technical indicators are screaming conflicting signals too. The MACD just crossed bullish, green histogram bars are expanding, and the RSI is climbing from oversold territory toward neutral at 48. But, and this is crucial, BONK is testing the 200-day EMA at 0.00002169. This isn't just some arbitrary resistance line, this is where 6 months of selling pressure meets 6 months of buying pressure. It's the ultimate truth or dare moment for this rally. If BONK gets rejected here, this whole breakout narrative crumbles faster than Luna Classic's market cap. We're looking at potential retrace to 0.00002000 psychological support, or worse, a complete invalidation back to 0.00001520. That's a 28% downside risk if the bulls can't defend current levels. Alright, time for the million-dollar question. Is BONK actually setting up for a legitimate bull run, or is this another meme coin head fake? The bullish case is actually pretty compelling when you strip away the emotions. First, that falling wedge breakout isn't some YouTube guru fantasy. It's a textbook reversal pattern with measurable targets. If BONK holds above the 200-day EMA, we're looking at the 50% Fibonacci retracement level at 0.00002350. That's an 11% move from current prices. Not life-changing, but respectable. The real fireworks happen if momentum carries through that halfway point. The 61.8% Fibonacci level sits at 0.00002958. That's a 40% upside target. And in meme coin mathematics, 40% moves happen on a Tuesday for no apparent reason. But the token burn mechanism adds a fundamental catalyst that most meme coins lack. When that trillion token burn executes, BONK's circulating supply drops from 81.06 trillion to roughly 80 trillion tokens. Now, 1.23% might not sound massive, but in a market where whales trade billions of tokens, removing that supply permanently could create a genuine scarcity premium, especially if the community momentum keeps building toward that million-holder milestone. The derivatives positioning suggests professional traders are already positioning for this scenario. $30 million in open interest might be pocket change compared to Bitcoin's $20 billion, but for a Solana meme coin, that's institutional validation. Now for the reality check nobody really wants to hear, BONK is still, a meme coin built on Solana. which means you're basically betting on multiple layers of speculation. First up, Solana network stability. We've all lived through the Solana is down again memes. If SOL has another outage during BONK's momentum phase, that rally could die faster than my crypto portfolio did back in May 2022. Second, the token burn is actually contingent on reaching 1 million holders. So, what happens if growth just stagnates at 950,000? Or if whale manipulation artificially inflates those holder counts? The burn mechanism pretty much becomes worthless. Third, meme coin liquidity can just evaporate overnight. That $30 million in derivatives might look impressive, but one major holder liquidating could send the price cascading right through support levels. And that funding rate decline we mentioned earlier? Yeah, that could be smart money preparing exit strategies while retail investors keep chasing breakouts. For those brave enough to actually trade this setup, the levels are honestly crystal clear. Bullish scenario. A decisive close above 0.00002169 targets, 0.00002350, then 0.00002958 if momentum really sustains. Risk management, stop loss below 0.00002000. That's your line in the sand, folks. Below that level, the wedge breakout fails and, well, we're looking at 0.00001520 support. This is speculation money only. If losing your entire position would affect your rent payment, you're just betting way too big. For conservative players, maybe consider dollar cost averaging on any retrace to the 0.00002000 to 0.00002050 zone. That gives you better risk-reward while avoiding FOMO entries at resistance. Token burn timing depends on holder growth, which makes this a medium-term hold rather than a day trading setup. Patience is definitely required. Look, BONK isn't going to replace Bitcoin or, solve world hunger. But it's presenting a textbook technical setup that's actually backed by fundamental catalysts most meme coins just totally lack. The falling wedge breakout, derivative positioning, and token burn mechanism all create a perfect storm for volatility. Whether that volatility trends upward really depends on broader crypto market sentiment and Solana ecosystem health. If this analysis helped clarify the BONK situation, go ahead and smash that like button and subscribe for more deep dive altcoin breakdowns. Drop a comment with your BONK price predictions. I read every single one. Remember, we're not just trading charts here. We're navigating the wild west of decentralized finance, where fortunes are made and lost on Twitter rumors and, dog memes. Crypto disclaimer. This video is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments are highly speculative and carry significant risk of total loss. The presenter may hold positions in discussed assets. All price targets and technical analysis are speculative and should not be used as the sole basis for investment decisions. Past performance does not guarantee future results. Cryptocurrency markets are highly volatile and can experience rapid, substantial losses. Only invest what you can afford to lose completely. Always conduct your own research and consider consulting with qualified financial advisors before making investment decisions. The information presented may become outdated quickly due to market volatility. Token burn mechanisms, holder counts, and technical patterns can change without notice. Derivative trading involves additional risks including liquidation and amplified losses.